Hello, everyone. Welcome to the Landmark Talks Property Podcast. In today's episode, we're here to talk through the Q1 2025 key property trends. This is coming from Landmark's latest property trend report recently published. That report is available on the Landmark website for anyone who's interested in reading it who hasn't seen it already. So with me today, I'm joined by Ben Robinson, Managing Director of Landmark Estate Agency Services, Rob Gurney, Managing Director of Ochresoft Conveyancing Technologies, Liz Jarvis, who's Director of Search at Landmark, and Richard Hepburn, who's Director of Scotland. It's safe to say that Q1 was dominated by one main thing, which is the closing of the stamp duty window at the end of March, which obviously resulted in a rush of people looking to complete to bank the savings on stamp duty before the changes came in. But we'll get more onto what that meant for the market later on. We're going to discuss the broader findings of what we saw in the England and Wales property market first, and then we'll move on to talk about what we've seen in Scotland, where there was no stamp duty change, later on in the podcast. So the first area to talk through is the cross-market activity. So what we look at in this section is we look at four major points across the property transaction lifetime. So that's listings, so new properties coming onto the market, sold subject to contracts, searches being ordered, which is a key part of the conveyancing process, and then obviously into completions, which is people completing on the transaction and moving in. So some interesting readings from this. So the listing volumes were broadly comparable with the same period in 2024, just 1% up on last year. Sold subject to contract remained steady, although were 9% down on the same quarter in the previous year. Searches ordered 8% up on last year, and then completions, as I mentioned earlier, dominated by the stamp duty window changing, were 30% up on the same quarter last year. So you can see that there's been a real impact on the stamp duty window changing. The next area we come to is digging into those specific details, which is the market supply growth, and that is in Ben's area really, from estate agencies. So Ben, would you like to talk through this for us? Tell us what we're seeing in that area.
Yeah, no problem, Mike. If you look at supply as a whole, and actually just taking it back now about 18 months, it's been running at sort of upper normal levels. And so the market's reporting quite a number of properties out there for sale, which is good news because, the supply ultimately is the start of demand. It's people looking to move. What we saw in this quarter, though, was a stronger start than end. Perhaps that was some incredibly ambitious people listing in January hoping to get through the stamp duty window, but I think it's more likely that March was impacted by a focus on completions, even for agents. At the end of the day, that's where their cash comes from as well, and so that was dipped down. So I'd expect it to jump back up, and actually it's been running quite hot, in a way also linked to the rent reform bill, which has been implemented. And actually what we've seen there, or the market's seen, is that drive landlords to look to sell up. So I'd actually perhaps expect a bounce back in April, back to the sort of levels we saw January, Feb in terms of year-on-year position, but certainly overall it's in a very strong place, and for the quarter it was about the same as last year.
Excellent, thanks Ben. And then I think the other interesting point that we can ask you to talk through is what we call the demand supply variance. Do you want to talk through that and tell us what we're seeing there?
Yeah, I think when you look at demand in itself, just raw demand, again, it's in a reasonable place. It can look quite negative from there, but I think there's a few nuances there in terms of comparing year on year, certainly against February, and we can see in physical number a jump from Feb to March. I think January being perhaps as strong or looking stronger is, again, people ambitiously selling, pushing hard to try and get through ahead of the stamp duty, because these are sales agreed, of course, not completions. And I think when we look at the mixture between demand and supply, I mentioned a little bit before, but ultimately supply drives eventual demand. It's people looking to move. And I think when we look at the turmoil we've seen in the markets the last couple of years in terms of interest rates and the impact that has on house prices, we've got a bit more stability now. And actually, we've got house prices, I think, correcting or corrected, as well as interest rates coming down. So what that should mean is that we see a brighter future in sales agreed, given the number of properties that there are available on the market at the moment.
Brilliant. Thanks very much, Ben. Rob, over to you from the conveyancing point of view. For conveyancing market activity, do you want to talk us through what we're seeing in that world?
Sure. Thanks, Mike. I suppose anyone that sort of has had a look at the report and can see the chart can instantly note that there's quite a significant drop-off between January and February when compared to the previous year, 2024. Now, that's potentially a bit confusing because in real terms, new instruction levels actually did rise between January and February. We just had a very strange anomaly that happened between those 2 months in 2024, the previous year, where there was an unexpected, I think, 16% increase between January and February in terms of new instructions. So obviously that's had a detrimental effect on the comparison with this year. But just to reassure everyone that there was no drop-off between the months of January and February of this year. It's just when compared to last year, that's what what we see. And actually, we do need to also consider the impact of working days. Of course, that's very important from a conveyancing perspective. And 25, there was one less working day than in 24, which again, on a sort of daily basis perspective, does need to be taken into account. So basically, it's a very long-winded way of saying that taking everything into account, there actually was quite a static level of instructions between January and February in real terms. But if we now consider the sort of the February to March differentiation. The interesting thing here is that, while, as you've already mentioned, Mike, conveyancers were going crazy with the SDLT deadline completions, new case levels were actually also on the rise, which is potentially sort of counterintuitive. You would expect perhaps there to be maybe a detrimental impact on new instructions because of everyone so desperately trying to get to completion before the stamp duty rise, etc. But we saw between February and March an actual 5% month-on-month growth in terms of new lawyer instruction levels, which obviously is really good news, certainly for the conveyancing industry, because they're in sort of case replenishment mode because of all of the completions that they managed to push through inside the first quarter. So that's basically what we're seeing in terms of new instruction levels for that quarter.
Thanks, Rob. And I know one of the interesting figures that you look at in conveyancing is the completion to instruction ratio. Do you mind talking us through, one, why that's a useful metric to track, and two, what we've seen there? Because I'm guessing, without stealing too much of your thunder, lots of completions will have changed that slightly.
Yeah, it certainly wasn't what we'd call a standard quarter for that ratio. But yeah, just to sort of clarify, the completion to instruction ratio is something we monitor just to sort of check caseload volumes and how the percentage between new cases coming in and sort of going out again at completion. What trends we can see basically from the activity levels. And yeah, January we saw 55% CIR, which is about normal for a January. February it increased to 62%, which was actually the highest February level that we've seen since 2021, in terms of more completions than normal, which of course was the lead up to the craziness of March and the SDLT cliff edge. March itself was 103% on the CIR, which is absolute craziness and unprecedented for a March. We only ever see the completion to instruction ratio exceeding 100% in December. when new instructions tend to sort of dry up, but completions tend to go a bit crazy in the run up to Christmas. And the only other times we've ever gone over 100% since we've been monitoring this statistic has been the previous stamp duty changes. So, yeah, it's an interesting one to monitor, and I think the first trend to sort of talk about here is the fact that the CIR has increased month on month throughout the 3 month period, and that's despite the fact that new cases have been increasing as well. So it's actually quite a positive sort of position to be in. And I think that's everything I wanted to cover off there, Mike, in terms of CIR. The one thing I would say, of course, is because of the amount of completions that were pushed through up to the stamp duty change on the 1st of April, it's obviously going to have a huge detrimental impact on completion numbers in the following month, in April itself. Clearly, the level of completions were never going to be sustainable month on month, and therefore, expect to see a pretty significant drop off in completion numbers. In fact, at the point of recording, we can already see that that's happened in April. Lawyers are once again focusing on progressing their less mature cases, because anything that could have completed up to the end of March, of course, did.
Thanks, Rob. I think, I guess from my point of view, it feels like positive signs for the overall market health that even instructions were looking good in March, despite the fact where you'd expect everybody to be concentrating on getting completion through, and nobody instructing new conveyancing case in March would really have had a realistic chance of it completing before the stamp duty deadline. So it feels like the pipeline looks pretty good going beyond the stamp duty deadline.
Yeah, the signs are positive, definitely.
Excellent. Good. Now over to Liz from the search world. Tell us what you've seen in the world of search.
Thanks, Mike. So just to echo what you'd said, we were up 8% year on year from 2024. What we saw in January was definitely conveyancers getting their ducks in a row, getting their searches ordered up from us, because we had a very buoyant January. In fact, a January that we haven't seen anything like since 2021 in search. So conveyancers were getting their searches ordered up from us. And as Rob said, that actually did continue over the next few months. We only really saw that die back a bit as the deadline loomed closer and closer. So as it got to sort of the middle of March, conveyancers then were really focused on, by that point, just getting cases completed. But to echo what Rob said, actually, also within search, by the time you're ordering up products from us in March time, that's not to see the stamp duty deadline, that's for transactions which they are thinking are going to close into Q2. And it did remain strong. And in fact, not wanting to preempt and talk about Q2, but of course we know that we're already seeing a really strong April. So yes, I would echo what Rob had said, strong, but it looks like the health of the market is certainly improving.
Fantastic. Thanks, Liz. And then the final bit to talk about in England and Wales is the mortgage valuation area. So that's what activity we're seeing in mortgage valuations, and I'm able to talk about that. So it was a positive quarter, a good quarter for mortgage valuation activity. I think what we've seen over the last 2 and a bit years since rates really started to increase the back end of 2022 is a market which, for valuation volumes, which is largely triggered by what interest rate looks like, so mortgage prices. Where we've seen more competitive and more competition in mortgage prices, we've seen more activity, and we have seen a couple of occasions where there's been quite fast, sharp increases in mortgage rates, lenders having to pull deals from the market, and we've seen very quick slowdowns in activity after that. We saw that in the aftermath of the mini budget. We saw rates and activity slowed pretty quickly. We then saw rates come down again into the spring of 2023. and then and more activity came as a result, and then that shot, we saw rates shoot back up again about May time 23, and activity subdued, and so that cycle's happened a couple of times. What we had going into the start of 2025 was a bit of stability. There were none of the kind of roller coaster of mortgage rates in the back end of 24 and going through 25. We've been fairly consistent, and if anything, a slow decrease in mortgage prices. So that consistency has helped the market. It's less people having to shop around more and more, brokers having to reapply less because rates are changing, and we've seen positive activity as a result of that. So the overall quarter was 8% up on last year for mortgage valuation activity, and the same quarter in 24 was 9% up on the previous year. So actually, quarter one last year was probably the most active quarter for mortgage valuation activity, certainly relative to the norms. And then we've had a pretty good quarter on top of that. And again, similar to Liz and Rob's point about activity happening for mortgage valuations in February and certainly March is fairly unlikely to have been transactions that we're going to complete before the end of the stamp duty closing in March. So these transactions are still in the pipeline, and therefore, again, point towards the fact that the market looks pretty healthy going into quarter two. March's data for valuations up 10% on the previous March. We'd expect mortgage approvals to be up year on year as well when the March data comes out. So that's us for England and Wales, and sat very patiently in the background is Richard Hepburn, the Director of Scotland. So I'm going to turn our attention to Scotland for the next part of the podcast. Richard, would you like to kick us off, talk about what we're seeing in Scotland?
Yeah, so and it's interesting listening to what you and everyone else has said, Mike, because obviously we didn't have the distortion of the tax change. Land and buildings transaction taxed up here, our equivalent of SDLT, didn't have a change in the spring. So we probably got a slightly more normalised market in terms of some of the other things you've spoken about, like the stabilisation in interest rates. And I think that's definitely flowed through into the results that we can see here. A lot of confidence in the market. You can see that listings in Q1 are up about 11% versus 2024 overall, which is a pretty strong position for us. And that flowed through, I guess, in terms of trends that we'd seen from quarter four of 2024, when they kind of sold subject to contracts, sold subject to missives up here. Levels, they kind of continued strongly too, so still demand, and at the end of the process, completions tended to flow through quite well as well. Again, we don't have quite the same number of dropouts in the process here, and I think that all flowed through into a very strong completions situation in the quarter. So yeah, overall a pretty healthy market, Mike.
Excellent. Thanks, Richard. And can you talk to us about how search volumes acted in the quarter?
Yeah, I mean, we have a couple of key searches that happen in the process here. So we have one pack that gets produced around the time that the property sells. So when it's sold subject to missives, subject to contract, and we'd seen that again mirroring the listings volumes up about 11% in the quarter over 2024. So really strong activity in that area. And then we have a second search, a sort of refresh of that original pack that's done within 40 hours of the property completing. And in fact, that was up 18% in the quarter over 2024. So as I said, I think the impact of stable mortgage rates, I think affordability is less of a stressor here, which can obviously cause some challenges in terms of dropouts. We're hearing lots of stories around that in the market, and that's less of a challenge for us. So yeah, that flowed through into pretty strong completions.
Fantastic. There's a metric as well that, in similar way that the conveyancing market in England, we track starts to completions. There's a metric that you track in Scotland, which is search to registered sales.
Yep.
Do you want to talk us through that, why that's an important metric, and what you've seen in that area?
Yeah, so I mean, basically, that's effectively this sort of 18% level, and basically what we're comparing here is our pre-completion search, the one done 40 hours before completion, with the eventual registered transactions at Registers of Scotland, so the HMLR equivalent in Scotland. Their data slightly lags ours. I mean, clearly it takes the solicitors usually sort of 4 to 6 weeks for that to kind of flow through into register stats. So it always lags us slightly. So that's why there's no data for March. But yeah, we can see that again, just echoing pretty confident market, and we'd expect to see when the March stats do come through from Roz, expect to see that mirroring what we've seen. Really, no reason why it shouldn't.
I'm potentially putting you on the spot here. In the previous two stamp duty window closes in England and Wales, so in 2021, did we see a slight spike in Scotland as well in terms of people moving across the border? Did you see more activity? Could we expect that?
Oh, that's a good question. I mean, certainly, when we speak to estate agents up here, there are a lot of people come up here for the fantastic weather, and the ambience and welcome that they get from their Scottish counterparts. But so I'm not sure it's a huge trend, but certainly there are people, certainly post-COVID, when everyone was looking for leafier green spaces, and clearly we've got a lot more land to population here, and I think we did see a few incomers as a result of that, Mike.
Yeah, interesting. Thank you. So finally, it's just for me to thank everyone for your time. Thanks for your input. Thank you everyone for listening. As I said at the start, the Property Trends report is available on the Landmark website for anyone who's interested. And we look forward to speaking to you soon about quarter two.